Hey guys, the stats are out. We got the new real estate statistics. I wanted to go over them really quick. So basically, I'm going to give you the highlighted report. Reach out to me. If you want this report to go through it with a fine-tooth comb, feel free to do so. Why do I like stats? Why do I like data? Because this is the truth. You'll talk to some realtors and you ask them, how's the market? Excellent! Okay, that doesn't even really make sense because there's a buyer and there's a seller. So excellent for who? So then, you get a more experienced agent. How's the market? Well, are you a buyer or seller? Or are you an investor? And with that information, they can give you that information. And okay, so here's the highlights of this. Right now, and this is going to play into a lot of the stats. Right now, interest rates are 1% lower than they were October of last year. So what that means is people can afford more house. So I think that factors into some of the statistics. We're also in the Southeast, we're in a really good real estate market because there's a lot of people up north moving down for the weather, for the cost of living, the taxes. You always hear people in the north, like when they hear what the property taxes are here, if I say it's going to be around $1,600 probably, they're like, a month? No, that's a year. And they're like, really? We're paying $20,000 for property taxes. So they're selling $600,000 homes, coming down here, getting a beautiful home that fits their needs because we guide them to the house that fits their needs best. So $200,000, they're in a house that meets their needs better. The weather's better. The taxes are lower. The monthly payments are lower. You know what? Use it and take your 2.5 hours and go down to Charleston or the beach, or just drive down and hop on a cruise. Enjoy yourself, especially if you're retired. But again, okay, so mortgage rates have gone down 1%, and that is big news. And they're still low. I think, the Fed says they're going to stop lowering interest rates. So I don't know if they're going to start bouncing back up or not, but we have to factor in on today's information, not the future. So that's information I can't give you rock solid. Okay, 4.1% increase in properties available. That number threw me. I didn't believe it. But then the next one explains it. 4.1% increase in contracts. I think I was Bugs Bunny there for a second. So what that's saying is, properties are hitting the market, properties are selling. So, and right now we are seeing a lot of new construction. And again, that's going to play itself out too. 1.5% increase in closings. So we're not that far ahead, but we are still closing more properties than a year ago. Days on market. This is going to start telling us if it's a buyer's market or seller's market. Days on market's down over 8%. So it went from on average 60 days to 55. Now, in a lot of the categories on a different report I was going over, there's a lot in the category of like 40 days on market. So, you put your house on, price it right, and a month and a half, it'll be under contract. That is, of course, averages. That's including houses that have sat for 6 months that are not in great shape or are priced more than what they should be priced at. So there's a lot of houses going under the market. Days it goes on the market, goes under contract. First week may get multiple offers. So it is a hot market. We still have tight inventory. I do think some of these stats are showing it may be loosening up slightly. But again, that's a feel, and that's stats that haven't played out yet. So okay, so median sales price up 7.1%. So from 168,000 to 179,000. Median is where you have as many properties underneath as above. So that's not the average. Okay, 7%, guys, that's really good for the Columbia market. We usually are talking about following inflation at 2 to 3% a year. So 7% is like 3 years, or we'll just say 2.5 years of what you would have expected to receive in equity in your home. Okay. Average sales price. So again, now this is actually factoring in what's moving, the higher prices, the lower prices. It went from 195,700 to 206,600. And shockingly, that's where you're seeing a sweet spot for a lot of the builders, is right in that 200,000 range. Affordability is down 6%. So what that means is houses are going up more than people's salary is. So while people from the north are finding the affordability down here amazing, the person who's lived here, now the reality is their house has gone up in price. It could be a great time to sell, lock in the low interest rate for the next mortgage. So even if you have to pay a little bit more on the house now, if the interest rates are lower, it's going to net you out a lot better down the road than if you wait for the market to turn, where if your house you selling goes down a bit, the more expensive house may go down more, but if interest rates are higher, it's still going to be more a month for you. So of course that, again, depends on all your circumstances. If you're a cash buyer, you know, right now, I don't know if we're going to see more price appreciation or less. A lot of people I've heard talk about hyperinflation down the road. Some people say deflation, and the housing market would change considerably on either of those scenarios. But in Columbia, we're in such a stable market that, you know, right now, as long as the nation does well, Columbia is going to do exceptionally well. Okay, so anyways, I hope that those stats help. I do have a few more reports coming out with that break them down in different categories, such as single family versus condos, 3 bedrooms versus 4 bedrooms, different price point breakdowns. And then I have one really nice report that breaks it down by area. So you can get a lot of stats for Lexington, for Irmo, for Blythewood. So, you know, I really like the reports when they break them down by location. Because, again, real estate is local. And it's even localized compared to Lexington can be different stats than Blythewood. Even though they're in the greater Columbia area, the location matters. And then therefore, if you read something on Bloomberg or Wall Street Journal about the housing market, those stats are not going to correlate here. Right now, so many more people are moving from other areas to the southeast. And Columbia, at one point, they're ranked number 2 for the millennium sales, second to Washington or Seattle, which blew my mind. So, you know, so again, stats are local. And that's why we have these broken down by local stats. These are the true numbers. And I hope it helps. I hope sharing these helps you understand the market a bit more. And, you know, the bottom line again, houses are selling quick, tight inventory, mortgage rates are really good, and the prices have gone up. Hope you're doing well. Have a great day. Drew Kuhlmann, eXp Realty. You need me, call me. Bye. 803-807-1827.